today's this chapter. Uh, just some theoretical explanation. Today we will discuss about the cash flow statement. Basically, cash flow statement is a statement that making a cash generated, how much cash total and how much cash is net in a year accounting period. That's mean in a accounting period how much cash is generated by the organization. That is determined. This is the cash flow statement. Cash flow statement is a statement which reported. Cash flow statement report a three angle: cash receipt, how much cash received in this year; cash payment, how much cash payment in this year; and finally, net sales in cash, how much sales the cash. This is the cash flow statements. Okay. Basically, cash in and cash out and determine the balance, how much change at the end of the year. This is the cash flow statement. A statement of cash flow indicates where the company cash comes from and how the company use it cash, from where the cash in or cash come, and what sources we are ready to payment or we has already been paid. Okay, paid section or receipt section. This is the cash flow statement, a basic concept. Method of cash flow statement. There are two types of cash flow statement: indirect method and direct method. Direct method: cash in left hand side, cash out right hand side, and then finally you try to make a balance. This is the direct method. Another indirect method. Indirect method, just net cash. Net cash you try to uh, assume the net cash, and then you try to find out the gross cash flow of the accounting year. Okay. Say for example, net cash 2 lakh or 10,000. Then you have to find out gross cash, how much cash are generated in the whole year.
না না এটা শুধু
Last
right,
stage you try to find out.
নাকি
This is the indirect method. Okay. What are the usefulness of cash flow statement or important of cash flow statement?
right.
Important or usefulness of cash flow statement. Cash flow statement basically try to identify ability of generated future cash flow, justify entity ability to pay dividend, justify entity ability to meet obligation, identify the reason for difference between net cash income and net cash flow from operating activities, to know amount of asset increase or decrease during the period by investment activities. And last, financing activities. Financing activities related with liabilities increase or decrease. This is the important or usefulness to determine the cash flow statement. Okay. Classification of cash flow. Cash flow, the three types. There are three types or three sources of cash flow: operating activities, investment activities, and financial activities. Okay. Operating activities involve income statement item. Investment activities are involve cash flow resulting from changes the investment and long-term asset. That's mean fixed asset sales and purchase related the investing. or you invest anywhere by purchasing fixed asset or by investing to any other project. This is the investing activities. Financing activities, you just manage your money as a capital in your organization. This managed by subscription, this managed by borrowing, this managed by any other third party. Okay, this is the financing activities. So ultimately, we can say that cash flow three types: operating, investment, and financing activities. But operating activities, current asset, current liabilities related to run the organization day by day. This item or entity are run in organization. From this item, you try to find out the operating activities. And investing means you just invest by purchasing fixed asset or invest any other project. This is related. And finally, financing related, you just manage your cash and capital in your organization. This cash capital managed by issue share, common share, preference share, bond, and a bonus share, right share, like this. You just manage. This managed by uh, issue share, by managed by uh, take a loan from others by as a bond. Okay, and other third parties you may manage anything by any way. You just make up the cash deficiency in your organization. This is the financing activities. Another slide there are details elaborated. The operating activities related current liabilities and current asset. Okay, and investing activities fixed asset related and invest to any project. Financing owner's equity. Financing owner's equity related because share related, bond related. This is the financing. Three sources of information to prepare cash flow statement. Compare balance sheet. By comparing the balance sheet, you may get the information about cash flow statement. Current your account statement, income statement, current income statement. You may get information cash flow related from the current year income statement, and you may get the cash flow related information by additional detailed information to determine how much company provide or use cash during the period. This is the okay. Non-cash item which should not be included in cash flow statement. Non-cash item, direct issue of common stock to purchase this asset. To purchase asset, you use common stock. This is a non-cash item. Conversion of bond into common stock. Bond you issue into common stock. It is non-cash item. Direct issuance of debt to purchase asset. You want to purchase a asset, but you use any kinds of debt. This is a non-cash item. Exchange of plant asset. You plant asset by asset you exchange, but in this situation no cash are needed exchange. Okay, so it is a non-cash related item, no need in income cash flow statement. First type of uh, item. But another item, depreciation, it is a non-cash related, but have to consider in the cash flow statement. But it is an exceptional item for this no rules and regulation. Okay, that's exceptional. To calculate cash flow statement, operating activities, how we calculate the current year income statement. You just consider current year income statement to calculate the operating activities. current asset and current liability from comparative balance sheet and selected additional item. Selected additional item or adjustment and balance sheet, you try to compare, and then you may get the operating activities related entity or activities. To calculate the cash flow from investing, investing just you invest in fixed asset, invest in other projects like this. Financing, that's before I already discussed. Cash flow statement, direct method. Direct method, cash receipt from customer, cash receipt from other customer, other sources, cash payment to suppliers and inventory, cash payment to operating expense, cash payment interest expense, cash payment for income tax. This is the major item of direct method of cash flow statement. And indirect method is just a somewhat difficult. At first, consider net cash profit, net profit or net. Then you try to less and add. Okay, some item add, some item less. Then you finally net cash flow operating activities. Indirect method.